I was saying to Julian at the beginning, I really like this to be as interactive and relaxed as we can be, you know, so please feel free to stop and ask me questions. I was a singer in a former life. I was at the Royal College of Music and then at the National Opera Studio after I did postgrad stuff at the college. Good morning. And then ended up retraining and sort of gradually found my way over a period of time into, admittedly, a slightly unusual detour from being a singer in the first instance, but yeah, ended up as a tax advisor and now specialise entirely in the world of accountancy, tax, business support, all of those kind of things, but exclusively for musicians and musical organisations. So it will go beyond just individual musicians into sort of orchestras or agencies even that support musicians, but it's all in the world of music. And truthfully, predominantly in the world of classical music, because that's my world. That was where I started and that's what I know the best. So hopefully it won't keep doing that. I don't actually know how to make it not do that. But I'll move along through. So I've made a couple of assumptions about sort of how to pitch this stuff this morning, because I know we have a mixture of students and we have people who are out there working and will already know some of this stuff. So what I'm going to do is whistle through the very basics just to put everything in context, particularly for the students, some of whom I know already got the basics a few days ago, because I was here last week doing a sort of more general introductory talk. At any moment, if anything is not clear or you need to know more about it, please do stop and ask. You know, everybody says this, but it's really true. It's very rare that a question won't be useful to somebody else in the group with you. So, and it's much more interesting for me because it just makes it more interactive, and I really like that. So that's our website, and not dissimilar to Julian, we also have a big education focus in terms of what we do. And we have a sort of a community, for want of a better term, where there's lots of free resources being added all the time. Webinars, recordings of things like this, and little blogs and social media posts if they were educationally based, you know, a random selection of resources. So do have a look at that, because one of the things I feel really strongly about for musicians generally and singers is that they're uniquely complicated from a tax point of view. Actually, as a group of workers out there in the economy, you have often an incredibly complicated tax setup, because you work in the UK, you generally will work abroad as well. It brings out all kinds of complexities in terms of how tax works across multiple jurisdictions. In the case of students here at the Academy, you're often from another country, so you have issues around what is your home tax country versus the fact that you're living here in the UK. It makes you UK tax resident. And you couple all of that with the fact that musicians on the whole are not as well remunerated as they should be, or as those people who might have access to really good tax advice. Tax advice is expensive. And to get really good advice is often really hefty, and I find that very problematic for musicians because they need really good advice, but it's hard to access it. So we're trying to bridge the gap in some small way with the community stuff. So check that out for some help there if you need it. So that's enough about me. The whistle stop bit is I think there are three fundamental ways that you need to think about what your obligations are going to boil down to, looking at it from being UK tax resident. And I'm going to make two big assumptions for everybody here before we start. First is that you are all UK tax resident. Even those of you with a home country somewhere else are probably UK resident for now. If I start losing the battle with the sirens, just let me know and we'll close the windows again, because I'm projecting, but obviously, you know, that's a challenge. So if you can't hear me, please just say. So you need to make sure you've registered. That's the basic stuff. When do you need to register? What triggers a requirement to register? We covered a fair bit of that last week, but you know, just make sure you understand the obligations that even here in the academy doing bits of ad hoc work, for example, with the development office, who might be sending you out to do a weekend messiah or a wedding group or whatever it might be. If you're building up enough ad hoc income doing that, and there's an intention to go out then and finish college, set yourself up more formally as a working musician, you may well find you're triggering that obligation while you're still here at college. Being a student doesn't mean you shouldn't be registered formally with HMRC for tax and being brought into the system of self-assessment. So vague numbers are over £1,000 a year between 6th of April and 5th of April is the 365-day stretch you're looking at. So over £1,000 in what you'd call self-employment income, so income that relates to your work as a musician. Over 2,500 just generally. Not employment, but you know, maybe you're lucky enough to be earning bank interest somewhere, maybe you have some land and property. You know, there might be other ad hoc sources of income. If they in combination total up more than £2.5 grand, you have an obligation to report that to HMRC. You won't pay tax on it at that level, but you have to tell them about it. And I think that's one of the things that people get really confused about, is telling them about your income doesn't necessarily mean you owe them tax. So they're two really different things, and just keep them separate. Reporting is one thing, paying the tax on what you've reported is a different thing, okay? Record keeping, I am going to touch on that a bit more, tax return obviously. And this is the bit about the record keeping, and again, I'm going to be fairly brief, but this is probably more catered to those of you who are out there working as self-employed musicians, which is the other big assumption I'm making. Is anybody here working through a limited company? Great. Okay. Well, I'll tackle you separately at the end. For those working through as self-employed, which is the vast majority when you leave college, because it's the easiest way and the most straightforward way to get going, there's an absolutely massive change coming next April, 9 months from now, which affects all taxpayers. Every self-employed person in the UK is affected by this change. It's woefully kind of underrepresented in the news, but they are getting there. And the thresholds to be brought into what's called MTD ITSA are 50,000 before expenses. It's not your taxable income, it's your money in. So lots of you might be thinking, yeah, that sounds great, but it won't affect me. But if you're a fixer, for example, your taxable profit might be way lower than 50. But if you're bringing everybody's fees in the first instance, you could quite easily go over that 50 before you've divvied out everybody's share. So just be aware, it's quite an important difference to know, are things being assessed on your income, which is often called your turnover, or is it being assessed on your taxable profit, which is after your expenses? So 50k income in before expenses, and these are the 3 dates that you'll be mandated in. And obviously, by the time you hit this one, you are talking about students and people fresh into the workforce, if they're living in London particularly. What it means is you're going to go from 1 tax return a year to 5 returns a year. Ah! Yeah, everybody's going, ah! Including the accountants and tax advisors and the freelancers. I mean, it's just a complete craziness. My recommendation for you is to just get in there, grit your teeth if you're not used to it, and figure out in the next couple of months how to use an accounting app to record your income and expenses. Those of you who are already very tech savvy and apptastic, the generation below mine, this is not a big learning curve. A lot of the apps are fairly intuitive anyway, to be fair. And what the benefit of the app is, there's loads of benefits of an app, but primarily it automatically has this digital interface requirement. So it ticks the box of reporting digitally. The app will let you do that quarterly submission, and then you have to look a bit more carefully to see whether it will let you do the final 5th submission, which is like the tidy up bit, which is a bit more akin to what we think of right now as our self-assessment tax returns. So how many of you have done self-assessment returns? Sort of 50%. So the 5th bit, which is now called the final declaration, but to all intents and purposes, I will in a sec, is a self-assessment return. is not necessarily going to be done by the same people that offer you the 4 quarterly. I mean, yeah, like how ridiculous is that? But that is the way it is right now. So just read the fine print. But these bigger, well-known apps are all a pretty safe bet. Yeah.
Just a quick one. So if you've got an account with some like Starling,
Yeah.
which have sort of built-in invoicing and all that stuff, is that allowable? Or
No, it's not so much that it's not allowable as much as they're not set up to do that digital reporting. So what you would be able to do with an app like Starling, which is actually oh no, it's not. This is my next recommendation. I like Starling for this kind of thing, and Tide. I like Monzo and Revolut because you're working abroad. Those I don't have any affiliate links to any banks or anything. So anything I recommend today is because I generally like it. But they're great, those newer banks that allow you to categorize things, but they won't be able to make that next step and report to HMRC. What they will probably be able to do, and this is a buzzword to look for when you're out there finding what you can use, is they'll probably integrate with something called bridging software, which is where you can take your information out of Starling, let's say, download it, it's all nicely categorized and organized, and then you will use some sort of an app, which is a bridging app, which will take your Starling download and push it into HMRC. The reason I don't really like that right now is, first, nobody's actually done one that you can test yet. They're all madly building them, but they're woefully behind. And they're often really un-user friendly. They'll get the job done from a technical point of view, but I find they're harder to use than these apps, which are just a bit more user friendly. And the other big recommendation, probably more for those of you coming out of college than those who are already working, is if you do nothing else between now and when you graduate and you set yourself up, get yourself to a point where you use one bank account only. Maybe you have a credit card, maybe you have a savings account attached to it, but fundamentally you have one bank account for work and it's separate to your personal banking. And the reason for that is all of these apps work by sucking in your bank data. Yeah, I'm going to close it as well. They work by sucking in your bank data and categorizing it. But the more banks you have connected, the more data you have to wade through. Oh God, sorry, Julian, do you mind if I ask you to do that one? The more stuff you have, you're going through Sainsbury's receipts and Costa Coffees and things if you've got multiple accounts connected. So it's just from an ease of use point of view, I would say get yourself to a single bank account. It's just going to be much more efficient. And also, then before you even start, everything going in is income, everything going out is an expense. You're like, 75% of the way there already, and that makes life much, much easier. So those are the kind of high level things, and I'm really happy to have more questions about them, but because I want to make sure we get on to Singer specific, and I want to make sure we get on to foreign, I'm going to kind of whiz through bits and then just rely on you to stop me if you need to. These are obviously really rough and ready expenses. Does anybody claim things that are a little bit left off-piste here compared to this list that you'd like to suggest as a viable tax deductible expense that we're wondering, is it allowable? Yeah.
Could you, because I was shopping for dresses yesterday, could you expense like a really expensive dress that you're only going to use for
we're coming
concerts and
to
stuff?
that
Yeah.
on that one.
Okay.
So I will weave a lot on that because it's very singer specific. So yeah, we're going to talk about that in lots of detail.
Tickets for concerts if it's reserved.
Definitely, tickets for concerts, yep.
Laryngeal massage if it's specific to singing.
Absolutely, yeah, osteo. Even things like Pilates, yoga, we'll talk about some of those. They're a bit more of a grey area, and they're on the grey area slide, so we'll get to those.
Say music schools?
Now, what do you mean by music schools?
Schools.
Scores, absolutely.
Schools, yeah.
Scores. Scores is an interesting one because if you invest, let's say you go out and you buy the complete works of Mozart operas. So you have the entire library of Mozart operas, full scores.
Yeah.
They're going to be expensive. That's what, several £100s at least, maybe more. That would often be categorized as a capital asset in your music business. All it really means, that terminology, is it basically just means it's got value in your business that extends beyond 1 year. You're going to be using it for years and years. Actually, concert wear, it falls into that same category. I haven't talked a lot about capital assets for today, because HMRC from this year onward defaults to a process where they're using what's called cash basis when you put your income and expenses into your self-employment pages. It means it's recognised when you pay it out of the bank, and the income is recognised when it goes into the bank. The other way of doing things is a more formal accounting method, which is where income would be recognised when it's owed to you, when you kind of earned it. So it might be the night of the gig, as opposed to 3 weeks later when you actually get paid. And likewise, expenses would be recognised so that they match up to the income. So let's say you have a 6-week opera contract, you book the Airbnb in January, but the job starts in May. So all of the income is being recognised over here in the year that started April and is running through to the following April. But your Airbnb at 2.5 grand is over here in February. So cash basis, which is the default from now on, would say, no, don't worry about it. Recognise your Airbnb in this tax year, recognise your income over here, it's fine. The more formal mechanism would recognise that this is kind of a payment in advance and should be matched up with the income that you're earning over here. And that more formal method is what used to be the default, it's now flip-flopped. Why I'm going on about that is because tied to the more formal method is a system called capital allowances. Those of you who are out there and have filed self-assessment returns, have you got to the bit on capital allowances and gone, what is that? And what am I supposed to do here? So capital allowances is just a way of taking a tax deduction for big capital items. So to go back to your question, a Mozart score collection would quite likely be a capital item, and you'd claim it under capital allowances. And on the formal mechanism, it would go through in a slightly different place. On the new default cash basis mechanism, doesn't matter, goes through when you pay for it. So I'm not going to get too bogged down, but I'm happy to come back if anybody wants
What
more.
would be the typical kind of useful life of a Mozart score for accounting purposes?
You tell me. I mean, I don't know. It's what.
5 years, or I mean, what would you generally?
Well, I don't know. I mean,
Think in the end.
when I was at college, if you'd invested in the Groves Dictionary of Music and Musicians, which lots of people did, it was a real kind of rite of passage to cough up for that. I mean, I would still have it more than 5 years later. So I think it's entirely up to you. You kind of have to make your own assessment, actually. A score, I would say, 20 years, 30 years. I mean,
But if you used it, say, for just one Mozart production, say just an Dominator score for one production,
Yeah.
would you be able to write it off?
Yes,
Okay.
and actually under the new system, you'd write it off in the first year, even if you're still using it 30 years later. You know,
Right,
you
sure.
can do it the other way
Yeah.
and take a little bit of it over the 30 years.
Yeah.
That would be the more formal version,
Yeah.
but there's no requirement to do that anymore.
Okay.
And to be fair, you didn't have to do it that way in the past either. You just had to
Yeah.
specifically say what you were doing.
Yeah.
Yeah.
I was going to ask, what does, you were talking about like cash basis, what does that mean?
So cash basis, I'm going to use the formal terms just so that we can distinguish between the two. Cash basis is one version of accounting. Accruals basis is the other version of accounting. Accruals is the more formal basis. Cash basis, all it means is you recognise your income when it comes into your bank or is given to you in a wad of cash. It's when you get it. And you recognise your expense when the money goes out, whenever that might be. So it's generally speaking, income in hits your bank account, you recognise it, you've earned that money. Money out, you bought your Airbnb or your Dominator score or whatever. When it goes out, that's when you recognise it. And whatever date that happens to be is the tax year that you're reporting it in. The accruals basis is this more formal concept of matching the income and expenses. You tie them together and you recognise them in, which to be fair makes a lot of sense, because if you're earning a big fee doing a 6-week opera contract, in lots of ways you want that expensive Airbnb deductible in the year that you've got the big hit of income, right? So there's lots to be, it's a very positive thing. It's not that one is good or bad. It's a question of choice. Yeah, I'm going to stop rather than get bogged down in that. Yeah.
Sorry, just to quickly ask, if, for example, you run mostly on a cash basis,
Yeah.
but then there was a particular example, like you've got a large one where you have to do your for example, you're paying for Airbnb.
Yeah,
Could you switch?
yes, that was what I was about to get bogged down in. And
Sorry.
No, it's fine. It's a great example of why it's always useful. Yeah, absolutely. So, this is the kind of thing you want to look out for. Somebody offers you a really lovely big contract and it's disproportionately well paid compared to your usual kind of income level. So if you're going along like that and you know in the future you've got something that's going to double your income next year, but you're investing lots in this year getting ready for it, you're having lots of coachings, you're buying an expensive score, you're paying for your Airbnb, you're booking your travel tickets back and forth, and all of that's happening this year. If you're taxed in this year at a lower rate because you don't normally earn that much, then actually, yeah, you want to be strategic and you want to elect to claim, to report on the accruals basis, because then you'll take all of that expense this year that won't work as hard for you, and you'll bring it over here and you'll go, I want to recognize it when I earned this money because I want to even things out. You're not allowed artificially even things out. That's called profit smoothing and it's illegal. But you are allowed to be sensible about electing for something that's going to be more beneficial for you. Yeah, was that a question? No, stretch.
I'm just searching.
Yeah, great. Okay. Oh, I've closed down. Sorry, give me a sec. Okay, there we go. So, I'm going to go into more depth on the clothing, the travel, tiny bit on the use of home. So before, knowing that I'm going to talk more about those, are there any others that we want to cover before we go into the clothing stuff? Yeah.
I've heard that singing lessons as opposed to coaching is a bit of a grey area because I think HMRC don't really understand that as musicians we're constantly learning. I don't know if that's still the case.
I would have no problem with singing lessons. I mean, tax is very subjective, which is one of the reasons I find it really interesting. You can look at and in fact we're about to do this, we'll look at a rule and then it is instantly contradicted by 5 different personal examples because we're all human with different ways of working, and it's instantly kind of going, well, how do I apply that to me? So lots of the rules are really, really subjective. Personally, I would have absolutely no problem with singing lessons. I think where they might, one thing that they would, going to college is a different category, and that is more problematic. But coachings and lessons, I personally would categorize as ongoing professional development, and that's absolutely fine in my book. Right, so these are the ones that have a more grey area to them, so I love getting into the detail, the weeds on this stuff, and we will. And of course they're very specific to singers because of all the musicians we're probably the most forward-facing. There's no instrument between you and your audience. So things like, clothing, whoops. things like how your personal appearance, your level of fitness, all of those sorts of things, they matter anyway, obviously, as a musician, but I always think they matter just that little bit more for singers. So, let's go. Actually, I'll come back to that because we're halfway there on the clothes stuff. So, there are a couple of, again, bits of terminology that you don't need to know the terminology, but you need to understand the concept behind it so that you're thinking through it when you're making decisions. Because self-assessment is exactly that. You are deciding what your income is and what your valid deductible expenses are, and you're reporting that to HMRC, or you're giving the information to an accountant and they're reporting it for you, but you're responsible for it. Even if the accountant prepares it for you, it's back to you in terms of ultimate responsibility. So you need to know at all times that you've thought through, is it allowable? If it is it wholly allowable or only partly allowable? Am I fine with claiming this or am I not? So wholly and exclusively is a term that you hear all the time, and it applies to lots of different aspects of your tax deductible expenses. And what it means, the default principle when you're claiming a tax deduction for anything is it wholly and exclusively for the purposes of your business? In other words, did I only buy this thing because I am a musician? This is the job I do, this is the work I do, this is how I earn my money. The strict line is, if It's not wholly and exclusively for the purposes of your work, it's disallowed. But this is a great example of why that instantly gets chucked out. Because that instantly gets chucked out. Because HMRC then go on and recognise, well, that doesn't really work for cars, or mobile phones, or clothes, or working from home, or broadband, or loads of stuff. So, you know, they put down this rule and then they go, oh, but there's all these exceptions that we will consider. So for self-employeds, it doesn't work like this for limited companies, but for self-employed, they recognise that yes, something should be wholly and exclusively, but then they instantly say, even on the .gov.uk website, .gov.uk guidance on the website, goes on to say, if you can attribute a recognisable or a quantifiable portion that is business use, we'll accept that. So the classic for that would be your TfL. So you go and you buy a travel card for a month, some of that's personal, some of that's work. You have to come up with a justifiable amount that you think is a sensible amount that is work related, and they'll accept that, even though theoretically that travel card is not wholly and exclusively, unless you buy a separate travel card, which actually lots of people do, or use a separate bank account and then only tap that card. That's the kind of thing where it gets helpful to have that sort of thing. And was there a question? No question. And then the other thing, leading on from that, because that opens up the can of worms of clothes. So we're going to look at that, and we're going to also think about these three ideas. Why did you buy what you bought? Is there what they call duality of purpose? In other words, does it have a personal side effect benefit as well as a business benefit? And if so, was the underlying reason, is the main thing the purpose of it, and is the benefit to you personally a side effect, or is the main thing the main benefit why you bought it? So this is a really important tax case in the context of clothing. And well, you can all read what it says there, I won't just repeat it. But I think it's a fantastic case for musicians to be aware of, because it's practically identical. Substitute orchestral musician here who needs to wear concert blacks, and you've got exactly the same problem. So this was set out in law in 1983, and it has been the guiding principle ever since. And it's what you need to think of when you're deciding, is your clothing allowable? So now let's talk about some practical examples. Your full evening gown and your full men's concert wear, wholly and exclusively? What do we think? Yeah, because you definitely don't go out and get a coffee in that, right? Definitely wholly and exclusively, no problem. What do we think about our afternoon nice dress for a 6 p.m. evening summer recital? What do we think? Can we claim? Let's have a hands up. Can we claim our concert dress?
Wear it for weddings.
You could wear it for weddings, exactly. Or our smart suit. Can we claim? But here's a question, and I'm not going to tell anybody anything, and I have an opinion on this, which is quite supportive before I ask you. Hands up those of you who have claimed a portion of a good frock, a nice frock, yeah? Or a decent suit.
That was for the suit, not the frock.
Yeah. There you go. Of course, and that's where these concepts matter. What was your primary purpose when you bought it? Is the fact that you can wear it for a wedding a positive side effect? In other words, it's the effect, but not the purpose. The purpose of that suit purchase was because you needed a good suit for a concert. And that's why these are really important. So there'll almost always be duality, we recognise that. But if there is duality, you then say to yourself, well, okay, why did I buy this suit? And this is where the self-assessment, honesty bucket comes in, because you have to go, did I buy it for the wedding and go, oh, it's going to be a really good suit for auditions? Or did you buy it for the concert and go, but I know if I have a wedding to go to, I can wear that. And that is your inner monologue when you're deciding what the purpose is. And you are self-assessing that decision. Nobody else knows what's going on in your head. Nobody knows why you bought it or what your thought process was. Although I don't want to be cavalier about that and facetious, and I would genuinely say, when you buy it, make a note of why you buy it. You know, I bought this because I bought it for this concert. I had my hair extravagantly done, cut, coloured, whatever it might be, because I had this concert coming up. Yes, I looked brilliant for the following 2 months, but that was an effect, not the purpose. Yeah? And I mean, honestly, I would, you know, just stick a little note with it so that if you are ever questioned, you can go back and say, yes, I did wear that again, but my purpose in purchasing it. Yeah, question.
Okay, are there any penalties or general downsides to being overly optimistic? Like, will you tick someone off, or should you just dump everything on there and kind of leave it to them to decide what to recognise?
When you say them, you mean your accountant?
Yeah, I mean when you're filing your taxes,
Yeah.
and choosing what to claim.
Yeah. So you would give your accountant like everything and just go, you figure out what I can claim.
The whole wardrobe. I mean, I'm
The whole, yeah.
exaggerating it, but you know, like,
Potentially.
why is there a danger? What is the incentive to try and be honest?
Yeah.
To be really
Yeah.
You know, like,
Well, there are two dangers from my point of view there. First is the vast majority of accountants are not former musicians and have no concept of the kind of thing we've just been talking about. There are a handful of us out there who have, you know, in-depth experience in the music world and genuinely can make an objective decision about stuff like that, but most of them haven't a clue, you know, and so they won't be able to make an objective decision for you. But despite that, you're responsible for what goes through. You sign off your tax return, it's on you if HMRC disagrees. And I'm going to digress, and sorry, apologies to those of you who've heard my talks before because you'll have heard the story. But the reason I ended up doing what I do now is because I got investigated by HMRC in my first year out of music college, when my travel and subsistence claim was 25% of my income, which was teeny anyway. And back then I was a pencil in a phone book. There's no question of that, but that's what happened. And I got this letter, and at the time a firm was doing my accounts, a big firm in the city, and I'd already paid back then, quite a long time ago, 500 quid to have everything done. And they wrote to me and said it'll be £2,000 to deal with this investigation. That was a quarter of my income. My entire income was £8,000 that year, of which 2,000 was travel and subsistence claim. And they said, yeah. And I was like, but I've given you I did what you did. I've given you everything. You have every receipt. What on earth could I give you more? And what would you be doing with it for £2,000? Anyway, I went into a complete panic. And back then, you got a name of an inspector from HMRC. These days, you can't even get through on the phone, but back then you did. So I rang up the name and the telephone number, and got a really nice HMRC inspector who clearly could tell I was young and panic-stricken, and said, just do it yourself. We just need evidence. We just need to know, how did you come up with the number you've got? And we need proof. I was like, is that it? And he went, yeah. And I went, oh, okay. I could do that because I know they were all valid claims. I then had added up on a Christmas cracker calculator, and I did actually have to do different numbers in the end, because clearly a Christmas calculator was not the right instrument for doing your taxes, but he was pretty generous about that too. And then it piqued my interest, and I did my own tax return, then I did friends, blah, 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 and on it went. Sorry, at the back first,
Yeah,
it's okay, and then I'll come to you.
Do you now need to keep receipts if you've got a separate business account and it's all in your statement?
No, and that is a great question for everybody. So if you're working from your bank download, and you don't even have an accounting app, if you have an accounting app, you're a step ahead, and I'll explain why. If you're working from a bank download, no, that's considered a valid evidence. What you need to be careful of is that if you become VAT registered. Now, if you become VAT registered, your bank meal, you know, the 25 quid at Ask Pizza or whatever it might be, doesn't show what element was VAT and what element was claimable. So if you're VAT registered, it's not enough. But if you aren't, it's absolutely fine. If you go ahead and use one of these accounting apps, they're even easier, because you take a photograph on your phone of the receipt, you push it into the app, you know, you kind of go click into the app, it says, what was this? You go, this was a meal, it was for this concert, it was this much, and it goes, thanks very much. and it's done. And that's that bit of your accounts done already, and you just do it as and when, and it has the receipt stuck to the bank transaction. It's all their evidence, which is why, going full circle, that's why HMRC wanted digitally reported, because that gives them oversight and insight into so much more. And they're trying to close the tax gap, which is fundamentally I agree with doing that. This way is proving tricky for people, but the reasoning behind it is good. It's the execution that's a little bit dodgy at the moment. So yeah, both of those things are absolutely fine.
So, I know you say you're suggesting to open a new bank account specifically for your business expenses as
Yeah.
a self-employed person, but obviously, so you didn't know this up to now, and they've been going through your only bank account, with your personal expenses mixed in
Yes.
with other stuff. That should still be okay for you to report stuff, isn't it?
That's absolutely fine, and the mix of a business account and my recommendation to have a business account is a personal recommendation because it makes the app easier and it makes your working through it is easier.
Yeah.
There's no problem with having a mixed account as a self-employed person. You're not allowed to do that as a limited company, but you are allowed to do it as a self-employed. So there's nothing wrong with it, it's just a bit more faff.
Yeah.
That's all.
Yes, I was just going to ask, if you come to a point where you've put things down as a claim
Yeah,
and they don't agree,
yeah.
are they happy if they go, we don't want you to claim for that and just pay the tax on that? Is that okay, or do they then take things further and?
There are 3 types of penalty for, a disagreement with HMRC. One is an honest mistake, which they discover or you voluntarily disclose. You turn around and you go, oh God, I didn't realise I wasn't allowed to do that. You voluntarily disclose that. In which case, penalties can range from, I think it's 10% to 30% of the tax underpaid, but they quite often will bring it down to 0. I can't say that they will, but they do quite often because it's a voluntary disclosure or a very genuine mistake. The second is where you know you've made a mistake and you don't do anything to hide it, but nor do you tell them about it. And that has a slightly higher geared penalty. And the third one is you knowingly hide or don't disclose when you should have, and that has a penalty of up to 200% of the underpaid tax, and you're named and shamed. So they do take it fairly seriously. And these days where it's not a pencil in a phone book, truthfully, it's because they're so under-resourced, they should be strategically targeting those who are in it for millions of pounds of tax fraud, not those who are making the odd accidental mistake for 50 quid. I'm not saying that therefore you're fine, but that is the benefit of the algorithms and the computer technologies that they have now. Back in my day, they didn't have any of that, so it genuinely was potluck. I would say it's far less likely. The things that do raise red flags, though, are really, really odd incomes that go way up and way down. Overseas, which we're just about to get to. I mean, there are lots of flags that get raised, which don't mean you've done anything wrong. It's just they're the typical things that people get confused about, and they know that. If they've discovered a mistake in one tax year, after you've put in your return, you have 12 months from the date of submission of your tax return. They have 12 months to open an inquiry into that return. And if they don't open an inquiry into that return, it's done and dusted. But, of course, they open one the following year, discover a mistake, honest mistake, but they discover it and they go, oh, well, we reckon you've been doing that for 10 years, mate. So now they're allowed to go back and open the last 4. If they open the one over here and they discover a not so honest mistake, they can go back 20 years and open all of them and levy the tax for all of them. So yes, they will take it, they will penalise you, they will go back up to 4 years, lots of things happen. But by the same token, they are fundamentally there to support civil society. They're there to get the big tax dodgers. They're not out there trying to penalise people who are doing the best they can and who are what's known as an unrepresented taxpayer. What that means is you file your own taxes, you take your own responsibility for it, you have no professional advice, you do the best you can. You're still supposed to make sure you learn, you read, you understand, you ask questions if you're not sure, And if you really have to, that you take advice, you're expected to do all of those things. But they also acknowledge not everybody has an accountant and a tax advisor, and that is fine. That's also absolutely fine. Okay, let's move on. Maybe we'll brave the sirens for 10 minutes with a bit of air. What do we think?
Yeah,
I
sure.
don't know about you guys, but it's very hot.
It's hot.
Okay, I don't want to go for you. So, going back, so this was her tax case, and it failed. And the reason it failed really cracks me up. The clothing was a fundamental human necessity of warmth and decency. Ergo, not wholly and exclusively for work, therefore not allowable. And warmth and decency. So when you're buying your tea dress or your nice suit, are you buying it for warmth and decency, or are you buying it for concert wear? You think about your purpose. But that is the key word, warmth and decency. Wholly and exclusively, clothing is for warmth and decency, and therefore fails the wholly and exclusively test, generally, with a whole load of ifs, ands, and buts. In the duality of purpose, you really have to think through. Can you claim it at all? Can you justifiably claim a percentage of it? Why did you buy it? And so on and so forth. So, I will in a second, to go and give you an actual practical recommendation rather than just high-level thoughts. My take on the sort of suit, nice dress, but not full formal wear outfit is that if you buy it fundamentally for work, and you keep it primarily for work, and maybe sometime hence you happen to wear it for a wedding, but it's a really infrequent event that it has a personal benefit to you, I would encourage my clients to bring it in at a percentage of its total value. I wouldn't take 100% of it, I might take 70% of it, on the basis that fundamentally the purpose was for work, and I'm keeping it for work, but I'm going to hedge 30% to allow myself to wear it for a wedding a couple of years down the road. That would be my take, but it is subjective, and another accountant, another advisor might recommend a different course, and you yourself independently might choose to go a different way. I have a client who absolutely insists on expensing a huge proportion of her hairdressing costs because she feels that's justifiable, and another one who expenses a big proportion of cosmetic stuff. And in both cases, they're like, no, I'm on telly, I'm in the public eye, I need this, and I'm really happy to stand up to an HMRC officer and explain what's what if I need to. At which point I say, fine, it's your choice, absolutely, I would support that. It seems to me you've thought it through, you have a rational argument, that's good for me. There we go. This is the one you want to think about now, because this is going to be really interesting. It hasn't been tested beyond the initial overturn that happened in 2018, but it has really turned the previous case on its head in many, many ways. I can't honestly remember off the top of my head why this is a less formal ruling. It just didn't make it as high up in the legislation as the other one did. So it hasn't been put to the test by a subsequent case. But this is what happened. She was investigated. HMRC threw out all of the claims for costumes, makeup, tanning, hair removal, lingerie, fake nails, the whole shebang. She went to court with it, and the outcome from the first tier tribunal tax judges was, well, actually some of it is all right, because yeah, you don't wear those murderously uncomfortable stilettos to Costa. They are effectively a costume. They're, you could wear them in normal life. They're not technically a costume, but they're akin to a costume, and they're not worn for personal use. They're completely kept separate. She made the case that she doesn't even wear perfume in her normal day because it reminds her of work, and she didn't want to be reminded of her job. So she didn't wear makeup, didn't have her hair done, didn't wear perfume, didn't wear the same kind of clothes, didn't wear the high-heeled shoes. The fact that she still had fabulous hair, a tanned body, gorgeous long nails, and whatever, she argued was effect. It was a byproduct. She didn't care. She couldn't take it off. So therefore, it was wholly and exclusively, therefore it was okay. And what was really interesting is they accepted it. And, all the tax advisors went, ooh, that's very exciting. So, genuinely, if you're being a bit punchy on something, I would put a note down that says, there's a white space in your tax return. If you're not sure about anything, you put your note down to explain it, because going back to this, you have a year to be looked at. If you put a note in the white space that said, I've not included this income because it was scholarship income and it was explicitly for the purposes of having a cross-interest paid or whatever, or I have claimed this £1,000 suit because da, 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 da. If you put that in the white space, the year has gone by and they haven't opened it up, then even if they disagree with a similar thing 2 or 3 years down the road, they lose the right to go back and open up that one from prior years, because you fully disclosed and they chose not to act on it. So if in doubt, spit it out. Just say it, what you're not sure about. There's nothing wrong with writing a note to explain what you weren't certain about, but this is what the course of action you've taken. And I would really recommend doing that. And I would, if you want to really kind of challenge them, say, following the precedent of Daniel's being HMRC, I'm putting down all my hairdressing, 75%, thank you very much. And see how you go. No, I mean, I'm being a little bit facetious, but you can rely on that as a reasonable justification for some of the decisions you might now make. And that's what's going to be interesting about it, because one of these days that'll be challenged. We'll have to see what happens. Clothing has a definition, according to HMRC. And this is the definition. And that is in the HMRC manuals. You can look it up online, and that is the exact wording they use. And they give an example of a black tie waiter. So just to put it all in context. Okay? Right, here we go. Moving on. Before we do, any other questions about expenses and stuff? Yeah.
When we say like I'm gonna put my holidays down 75% or 70% of this dress, where does that number come from? Like, is it an estimate?
Yes.
Yeah.
It's an estimate.
So you can generously estimate.
You could generously estimate, or you could, in my recommendation, would you realistically estimate? Don't over-egg it, because then it's just going to look really dodgy if they do look at it. It's an honesty system. It really is an honesty system, because you have to tell them what you think is fair, is right. So do that. That would be my recommendation.
Just a general point about, I know you said your bank accounts can be interfacing with these accounting software like Xero and stuff, Free Agent and things. But how about, a lot of our expenses can be paid maybe with our credit cards.
Yes.
Do those credit cards interface with
Yes.
those accounting software?
Yeah. Credit cards interface, not every bank and not every credit card it does connect,
Right.
but you can look up the app and
Yeah.
it will tell you which ones it takes and which it doesn't.
Okay.
For those of you, especially coming out of college maybe, who would be setting up a bank account from fresh, who don't kind of have a vested interest, I will just mention that NatWest has an account called a Metal account, which I think has fairly low fees, and as part of the NatWest Metal account you get a free agent account. So a free agent accounting software app to use, which is a decent offer. That's about 20 quid a month in app fees that you're saving, and free agent is a great app. I really like it. So if you've got no vested interest in anything and you're starting from scratch, you might want to have a look at that. Personally, I like Xero. It's maybe a bit more accounting friendly, and that's the one I use. It's the one we use in our office. QuickBooks is all over the tube. Personally, I don't like it. I think it's a little bit confusing in some of the terminology, but by the same token, loads of people use it and use it effectively and well and find it easy to use.
Sorry if you've already said this. Are there any of those that are actually recommended by HMRC?
No,
Okay.
they
So they don't
absolutely
have a
won't
favourite.
make a recommendation.
Okay.
And what's really interesting is, despite the MTD mandation, the fact that people are being pulled in whether they like it or not, and have to report digitally, HMRC are not going to provide an app. So they provide the software to complete your tax return. They will not provide an equivalent piece of software to allow you to report quarterly. You have to go out and buy something. Apparently there will be free options. I haven't seen any yet, and we're quite close to the deadlines. There probably will be free options, whether they're as easy to use. Then you think through the time and effort working through something that isn't that intuitive versus do you spend a bit more but it's mostly done for you, and those are personal choices.
a stupid question, but is paying app fees for an accounting app tax deductible?
Yes, it absolutely is. Penalties, though, if you muck up the tax, are not tax deductible. So no penalties, no speeding fines, no parking tickets, no late penalties if you miss your tax return deadline. But yeah.
And sorry, just in terms of how the apps work, if you're doing what we were discussing about putting in a percentage of something, can you actually do that on the app?
Yes, you
Or is it-
can.
Okay.
Yeah, most of them have a really clever, like what they call a rule setup, where you put in every time it goes to motor expenses, make it 70% business use, 30% personal use, for example. Or every time you see oyster coming through, send 30% to personal, which is defined in a particular way, and send the other 70% to travel and subsistence for my accounts purposes. Every time you see my singing teacher's name, send it 100% to professional development, and it'll do all of those kind of things. Yeah, and you can go back in and edit and change if you need to. But it's very clever stuff. It really is. It is. It makes wow. Because when I got investigated, I was literally at my kitchen table with paper everywhere, and my Christmas cracker calculator. And it's moved on definitely.
So 2026 is the first cut-off point if you're earning over £50,000 income. So what does that mean? Does that mean that's when you start having to use it? So therefore, it would be in the January afterwards. Do you know what I mean?
It's a good question. So just for clarity's sake, 2026, for those of you, it's assessed on the 24-25 tax return. So if in your 24-25 tax return, which is the one that's due in January, if in that one you report income higher than £50,000, you will be sucked into MTD ITSA at April 26, at which point your first quarter starts on the 6th of April 2026, ends on the 5th of July 2026, and is due in with HMRC by the, God don't quote me, the dates keep moving, I'm going to say 5th of August 2026. So the first quarter is due a month after the end of the first quarter, and you're in, you're straight in.
So you need to start using this now.
Yes! Oh yes, I have said that a lot to my clients, a lot, but they didn't get it yet. Yeah.
Is this going to be through the same gov.uk tax website? It's not like they've changed where it's going to be reporting.
Yes, no, it is changed.
Is it? Okay.
It's
But
fundamentally
they'll
changed.
they'll kind of remind you and stuff, or is it all just on us to go and?
It's on you. Anybody who looks like they will be pulled in has been getting letters. So, you will have been getting letters if it looks like you're going to get sucked in next April. And you will get letters when it looks like you're going to get pulled in. Or at least you're supposed to get letters.
Or emails.
Or emails or whatever it might be. But to go back to your question, which was a really good one of, will it look like the same thing? Can I go to the same place? No. Because the tax return is about to kind of die, and it is not being replaced thus far with HMRC software. So you can't fill in, if you're in MTD ITSA, let's for argument's sake pretend we're all in next April, and you have to file your quarterly returns. When you get to, you'll do that somehow. When you get to the end of the tax year, you will have to file a final declaration, not a tax return. It's the same thing, it's always something different, and it'll have a different interface, and it won't be the tax return interface. That, from your point of view, that's done. It's over with. Which is why when you choose your software, you ask them, does it do the full journey? And what that means is, will it not only do the 4 quarters, but also the tax return bit? And it's called full journey software, and not all of them offer it. So do make sure you look at the small print. They're scrambling, the software people are really scrambling to try and catch up and get it ready. So yeah, look at the small print. Okay, should we do foreign stuff before we run out of time? Okay. Okay, here we go. So there are 2 ways that you could quite conceivably end up working abroad, and I'll try and do kind of 50-50 in terms of time on both of them, because I know we're interested in FEST contracts, which is a much more permanent and substantial move to Germany in this case, although I suppose you could have a similar setup in any other country. But there's also just the kind of more likely option that you will be working abroad, that you'll fundamentally still be based in the UK, but you'll do work abroad. Every time you these are the things that are issues for you. There'll be almost certainly withholding tax. There's, if it's a performance abroad. If you don't get withholding tax deducted, it's quite often because the person you're working for didn't realise they were supposed to. Nearly all tax agreements between countries say that if you're a performer or an entertainer, there's a special clause for entertainers and sports people, and you guys fall into the entertainers section of that, which means it contravenes or overrides the normal double tax agreement rules between countries, and it says you can tax that entertainer on the work that entertainer did in our country. So you go to Germany to do a concert, the rules say Germany can tax you because you entertained in Germany and you're an entertainer, even though you're a UK tax resident, you pay tax on your worldwide income in the UK, you're only visiting Germany for 5 days. Now if you stop and think, oh, that's a real hassle, why do they go to all of that? Because look at Taylor Swift. So HMRC has taxing rights on Taylor Swift's performance income in the UK. I mean, she probably has some incredibly fancy Wii's set up, so but if Taylor Swift was over here in an individual capacity and didn't have 50 million offshore companies doing concerts, then the UK HMRC can take 20% for an entertainer's tax from her, which of course they want. Footballers are the other big ones that are subject, that fall into this. And the fact that your fee might be €1,000 rather than €1,000,000 is entirely incidental. It's the same rule for everybody. So that's why. Germany's withholding tax rate is 15.825%. So in terms of cash flow, if you're doing a job in Germany, you instantly just knock off the first 15-16% because it's going to get withheld at source in Germany. Then you have to think about your social security deductions. That means get an A1 form. Who's heard of the A1 form? The A1 form is generates more phone calls to the MU helpline that we run than anything else. So it's a form that says I pay social security in the UK because I'm a UK citizen and a UK taxpayer, and I'm subject to UK social security, which is national insurance. Therefore, you, foreign entertainer in another country, don't need to take that country's social security from me because I'm covered by my own country. Thanks very much. And you want that form because if you can't give them that form, they have to take their equivalent of national insurance from you because you're always subject to social security deductions in the country in which you're working unless you can prove that you're paying it somewhere else. So an A1 form, if you Google A1 self-employed, it'll take you to the form and you can fill it in.
Is it worth saying the wait time?
It is definitely worth saying the wait time, which is 27 weeks, half a year. Woo! To get your A1 form. Yeah. And what happens then is you have two choices. You get paid minus the social security deductions because the local promoter won't not take them unless you can prove to them that they don't have to. Or you wait 27 weeks, get your form, give it to them, and then you get paid. Where it becomes a complete mind situation is when you're talking about a whole orchestra, which they often are, and your entire orchestra is waiting to be paid. I mean, oh my God, the nightmare around that. To be fair, big organisations have a hotline, but it's still an absolute nightmare. So get your A1 form in as quickly as possible. Some of this won't make perfect sense right now, but if you just mentally note it, even if you've got multiple gigs, abroad, you can apply for what's called a 2-year A1. You don't bother Googling 2-year A1, it won't come up. Google, pens at the ready, CA8421 small letter I.
CA8421.
I should have put that on the slide. CA8421I. It's a 2-year portable A1 document when working in multiple EEA countries, something like that, for self-employed.
So you have to have a specific A1 for each.
Yes.
gig.
So you
So
either
you
have,
blanket.
so Miranda's question was, do you need a specific form for each gig or can you have a blanket one? So the 2-year one is a blanket one for the 2-year timeline, and you apply for it for all EEA countries. You have to upload a letter that says, please make this relevant for all EEA countries, because at a moment's notice I might be asked to step in and do something about this and I want my A1 at the ready. we do really have a blog on this and links and a step-by-step video on how to fill it out. It's a bit out of date now, but the fundamentals are still okay. And 50 million social media posts on it because it's such a hot topic. So do look for it with us and look for it on .gov.uk, and you should be able to piece it together. But if you're desperately needing one like now, and your gig is 3 weeks from now, and even if you have multiple gigs over the next 6 weeks, let's say, at the moment, my recommendation is you do a single form for each job, because the single forms, CA3837, are being processed more quickly. Still not fast, but you'll get it back quicker, then you'll get your 2-year one.
What was the number again?
CA3837 for the single gig one.
Yeah.
And 8421I for the 2-year one, okay? So, and all it's doing is saying to your French promoter, don't take French social security, I'm okay. That's all it's saying, but it's really important that it says that.
For people who are European,
Yes,
but have national insurance in the UK, but then go and work in Europe,
yes,
is it the same kind of forms?
yes.
Or would we,
Your question,
yeah,
a great question, so just in case you didn't hear it, what if you're European and maybe your home country is a European country and you're here as a student or like sort of temporarily but for a couple of years? How does that work? You actually have to decide before you apply which country's A1 are you applying with. Are you at the moment subject to UK Social Security? Is this where you pay your main deductions and contributions? Are you covered for healthcare here, for example? Are you paying into the state pension with your national insurance contributions? If the UK is fundamentally where you're based, you'll want a UK A1. If your home country is, let's say, Portugal, you would probably need to be living in Portugal to qualify. Even though you might be a Portuguese national, if you're not in Portugal contributing to the Portuguese social security system, I mean, I can't be certain because I'm not a Portuguese advisor, but I think you'll find it harder to get a Portuguese equivalent A1. But all countries have their own version of this. So that bit is true, but you have to decide where are you subject to social security rules at the moment as you're applying it. And chances are if you're a tax resident here, you're probably resident for social security as well. Which are two slightly different sets of rules, but there's a sort of Venn diagram overlap. And the simple version is if you're subject to one, you're probably subject to the other. Yeah.
So you're saying going back to income tax, your 20% is taken out of the touring country rate as well as your UK liability.
Yeah.
So therefore, is the 20% that's taken off in the touring country, is that tax deductible from your
Yes.
self-assessment in the UK?
Yeah, then we can talk about that. And that's next. That's good. No, it's great. So, yes, you are subject to tax in the UK on the same income, even though you pay 15.825% of it in Germany. And because Germany has taxing rights under the foreign entertainers rules, UK has taxing rights because you're a UK tax resident. That could lead to double taxation. Sounds like double taxation. But there are things in place to help you, which I think might be on the next slide. This slide is really just how to make sure you get your ducks in a row to then avoid double tax. So make sure you get a pay statement from your promoter. You can look up the double tax treaties. Well, yeah, I've said that stuff, that's really the A1. So moving on, sorry, it's still on documents. This is how you take the claim. I'll go back a slide in a second. This is how you take the claim. So what you would do in practical terms is you'd come to do your UK tax return. Your full liability, including your German source income, is all totted up and your tax bill comes out, the sausage at the other end. But then you say, oh, but I paid this much tax on this bit of income in Germany. And it is that specific. It's 15.85% of this fee in this country, and your tax calculation gets adjusted and it recognizes only to the point where you would have paid tax on that income in the UK. So for example, let's say you're not subject to UK tax, or you're barely into UK tax. You don't get the money back. You get a credit for what you would have paid on that income if you had earned it in the UK. That's how they look at it. But you know, for lots of people who are out there working, it effectively means you've kind of paid on account in Germany, and you get a credit for hopefully most of it. The killer countries are US and Italy, who take 30%. And And if you're a 20% taxpayer, which is a basic rate taxpayer, you lose the other 10. And that sucks. But that's the way it is. Unless you file a local return in the US. And that's a talk for another day. Okay, so things that will help you work this stuff out, just in terms of being organised as you go through the year and not losing track of emails and putting them somewhere safe so you can come back to them when you're doing your tax return. Keep your contract, because it quite often will say what the withholding tax rate is. HMRC publishes monthly official exchange rates, which they're happy to accept. They're often wildly different to your bank's rates. So they will take your bank's rates, but you know, it's easy to use the HMRC rate because they'll never quibble with it. Make sure you get a pay statement. I mean, honestly, the amount of time we spend chasing pay statements is remarkable. In theory, you should get a certificate from the country that says this is how much foreign tax you paid in our country. But HMRC will take a pay statement, or you can do the working out from a pay statement. Actually, HMRC don't need to see the pay statement, but you need it, because you need to know, you know, if you're doing it, let's say you do a job for 1,500 euros, and let's say of that 1,500 euros, 200 was travel expenses that they were going to give you, and the rest was subject to tax. And then they dump £900 into your account. I mean, how are you supposed to know which bit was taxed, which wasn't? What was the expenses bit? Was the expenses bit taxed, or was it not? What exchange rate did they do? You know, all of that. But if you have a little piece of paper that says we started at 1,500, we didn't tax your travel expenses, we taxed the 1,300 at this rate, which left this much euros, we converted it, and this is why you've got 900 quid. That's what will really make your life much easier when it comes time to do your tax return.
The pay statement, is that from the country or the employer?
Yeah, the promoter, whomever hired you to do the job.
Okay.
Yeah.
And you can just ask for that and they
Yeah.
should provide it.
Yeah, they really should. And you can ask for it later. Just email them and go, I'm really sorry I left without ever asking, and you've now dumped the equivalent of 900 quid in my account, but can I have a pay statement, please? Yeah, fine, totally fine to do that. I think that I do want to get to the first bit. Just to go back to your example, you have two ways of doing your fee. We've been talking about this way, which is where you take a credit on your tax return, but you can just claim the income that hit your bank account, which is the income after you were subject to tax on a higher income in Germany. And I would love to be able to tell you a hard and fast rule about which one is better, but unfortunately it's a tax advisor's favourite answer: it depends. But in general, if you're a lower earner, you're not making an awful lot of money, you might be better off doing that one. And if you are earning and working very regularly, it's probably better off doing that one. Because if you think about it, this one, let's use easy numbers. This one after tax is 800 quid, this one is 1,000 quid, but you paid tax of 200. So it's recognising, it's charging you tax on 1,000, but recognising you've already paid 200. This one is just taking your 800 and taxing it. You actually pay more tax on that version, but it depends. So just be aware, okay? This is easier, no foreign pages, no faffing around with statements, no chasing promoters. If need be, perfectly fine to do this. But this is often better, so just be aware of the fact that you want to think about it. Okay. Last bit. Now we're going into that. I'm actually going to move to Germany and take up a permanent employment contract in Germany. We're saying Germany, it can be somewhere else, but you know, let's work with Germany as a good European country example. And what do I need to think about? You can look it up fairly easily, but Germany's tax residency is triggered after a very, very common rule, which is 183 days in the country. We have the same one. Our basic premise is you're becoming tax, going back to the student situation, and you're over here, but it's not your home country. Tax residency is triggered in the UK after 183 days, or a whole load of other complicated rules, I'm afraid, called the statutory residence test. I'm going to leave that for now. Germany, you should take advice, but the default would be in most countries you'll become tax resident after half a year. Yeah. And when you work in a German opera house, you'll be subject to tax and a whole load of what I call the Versicherungs, which is all of the different social security contribution types that they have. It's very comprehensive. We're going to go through them on the next one. When you're leaving the UK, HMRC expecting tax returns. Consider doing that. Be aware that just because you're leaving, if you leave late in a tax year, you're probably still going to be tax resident in the UK in that tax year, even though you might be leaving in, let's say, January, 1st of January start date, but you're 8 months into the UK tax year by then, 9 months in. You're probably UK resident in that year. Technically, if you're UK tax resident, you report your worldwide income, which in theory would then mean your German Opera House income from January to the 5th of April. Well, that's no good. So what you can do is called split year treatment. Once you get into split year treatment, my recommendation is get help. It does get complicated. I really never push going out and getting an accountant and a tax advisor because there are so many variables about why that might be the right thing for you or not. But when you get into double tax treaties, dual residency, split year treatments, those are tax concepts that I genuinely would say you'll probably get, you'll get what you pay for. It'll sort you out properly, and it's probably worth doing, even if you just do it for a year or two while life is complicated. That would be my recommendation, but you absolutely can still do this yourself, and the phrase you're looking for is split year treatment. And there's a tick box on your tax return that says, I'm claiming split year treatment. I left the UK on the 31st of January 2025, and I became German resident on the 1st of April, you know what I mean, the next day. This is a really personal question. If you think you're only going to go for a couple of years and then you're going to come back and pick up over here, I'm not sure I would recommend actually shutting down your self-assessment. You might want to keep it going and just report nil. You might want to keep it going because even if you're no longer UK resident, you've become German resident, any money you earn in the UK is still subject to UK tax. So just because now Germany has worldwide taxing rights, which they do, because now you're a tax resident in Germany, but if you come over here and do a job, HMRC want their slice of that. You're in the Taylor Swift ballpark again. You're over here, they want their cut, even though you're not resident here. And the really weird thing is, you might find yourself being subject to the FEU, entertainers tax, foreign entertainers unit tax. So this is a unit within HMRC that looks after taxing foreign entertainers. And the person who hires you over here, when you're not resident in the UK, should be withholding 20% UK tax from you and reporting it on your behalf to the FEU with an FEU form and giving you a piece of paper, a bit like the pay statement thing, that says this person has paid 20% FEU on this UK source income. And then you claim that as a deduction again, not a deduction, you claim that to recognise it in your tax return. And that, I'm going to come in a second, but that can be really confusing because you might be working for promoters who know you and who would never think to do that because you've been working for them for years and you went off to Germany and you're coming back to do a job and that's great. They might never go, oh, do we need to FEU you? But you go, you probably need to FEU me. I'm not UK resident anymore. So just help them by raising it as a possibility.
Just to ask, the P85 form you mentioned, that's notifying HMRC that you're leaving, but that's not ceasing the supplement.
Exactly. It's notifying you, it should probably take you out of self-assessment unless you decide to voluntarily stay because you know you'll have, you say, UK source income, or maybe you're renting a flat. That'd be a classic one. You've got a home here and you decide to rent it out. Now you're going to have to declare your land and property income every year, so you want your self-assessment to keep going. But it just tells them I've stopped being UK tax resident. That's really what it said. And that last one, yeah, you can be both quite easily because we use this to decide whether you're a UK tax resident. It's not only the 183 days, there's also a whole load of other tests that determine whether you're a UK tax resident. So these are the easy peasy tests because they're hard and fast facts. But this one, do you have ties? If you miss out because you don't meet the days tests, then you can become resident on ties. And they're very touchy-feely normal things like, do you have family here? Do you have a place to stay when you're here? Do you work here? And if you do, how many days do you work? A work day is 3 hours. Any 3-hour stretch is a work day. Yeah. And this one you would want to check because I've just taken that from the internet because I'm not a German tax advisor, but it seemed like it was a reasonably good bet. But obviously you would double check with your German advisor when you move to Germany to make sure you're being fully compliant with their rules. But that's probably a good starting point as an assumption. All the Versicherungs, so that you know how much money is coming out of your pay every month, and you can have a think about what you're likely to actually have as take home to spend while you're in Germany. So in addition to income tax, which is on a progressive sliding scale in Germany, and that's all I can really tell you, again, because I just looked it up, it says between 14% and up to 45, not dissimilar to our income tax rates. But they have all of these Versicherungs that come off, which often equate to the best part of 20%. So you're 20% on your Versicherungs, and let's say as an average 20 to 25% maybe of your income is coming out before your take home. So just to keep that in mind in terms of your cash.
So this is their version of national insurance.
Exactly. Yeah. And most of it you can't get back. This counts towards UK state pension contributions at least, and you'll get your teeny-weeny German pension when you hit pension age if you've been there for a while. But you can't get it back. Some countries can, but the UK can't. Most of these, as you can imagine, you don't get back because you kind of use them or lose them when you're there. Done that. This is one that might catch you out. Just keep an eye on that one for those of you who are students, because student loans won't know you've left, so that you'll need to make an arrangement with them to tell them you're no longer a tax resident. Split year we've done that. Actually, I've done a lot of that.
Could I ask about pensions?
Yeah.
So if you're tax resident in a different country, you're contributing to pensions.
Yeah.
If you then move back to the UK, retire, could you claim that money back? Could you unify your pensions?
Yeah.
Does that work?
Great questions. Yeah. Yes, fundamentally. Your contributions to the German state pension count for German state pension, but the contributing years count towards meeting the total number of years that you have to contribute to a UK state pension to qualify. So in the UK you have to contribute to the state pension for 35 years just to get the state pension. And if you're short a couple of years because you were in Germany, those years you were paying into the German state pension count and will top up your UK years. In terms of the actual money, honest answer is I'm not quite sure how it works. I suspect they don't join together. I think you get a very small German state pension, which you can pay into a UK bank account. There'd be no problem with that. And then you get your UK state pension if this is where you are. Or vice versa. You get your UK state pension if you've contributed enough, and it's paid into your German bank account because that's where you live now.
Okay. So you can do that if you move away from the UK, but you've contributed for 35 years.
If you've contributed, yeah.
Okay.
Yeah, absolutely. And if you're touch and go, you can make voluntary contributions to the UK state pension to make sure you keep up your 35 years. And that's often something we say to people if they're moving abroad on contracts for a couple of years. We would often sort of say, at least have a think about doing the voluntary contributions just to keep going, to make sure you're still putting your money into the state pension for whatever it will be worth at the time. Okay. Right, we made it. Well done. It's a lot of dense information, I know, and I end up talking really quickly because there's always so much to say in quite a short space of time. So thank you for sticking with it, and please do now ask any questions you'd like to. We can go back over things, and I'll stick around for that for a bit. But that's us. This is a brilliant website. It's specifically designed for unrepresented taxpayers. It's really jargon-free, it's user-friendly, it's very comprehensive. It's not musician-focused, but it's just a very, very good website. And we sort of try and model ourselves in terms of the desire to be helpful to unrepresented is what we're aiming for in terms of our resource doubling. Obviously, we have like a fraction of what's available here. So, but they're great. So check that out as a site. This is a paid-for site, but it's very, very good tax advice, and they have lots that you can get for free before you have to subscribe. So it's worth checking out for some of the more complicated stuff. And they do like newsletters and things that are useful as well. And the woman who runs it has actually just sold it, so I don't know what will happen to it next, but it has been historically really, really good. .gov.uk, obviously, it's there and it's getting better. They have a YouTube channel, HMRC HMRC has a YouTube channel which is really good. So I would recommend checking that out. Musicians Union, just a little plug for that. So Musicians Tax Advisor are the advisor to the MU members, which means if you are an MU member, you have access to us, to a conversation with us or a consultation with us. It's pretty short, but it's enough often to steer you in the right direction. You get 15 minutes of either like emails back and forth or a quick video meeting or whatever it is you might need. And we have a stream for both overseas tax questions and general tax questions. And that's all, we're like retained by the MU. So it's all done through your MU membership, but it essentially gives you access to us. So that's something to consider. The community I already mentioned, it's a work in progress, so some of this stuff is more developed than others, but this is our next big goal, is to build this bit up and to start putting some more comprehensive stuff together. This is already up and running and it's free to join. We did like a session on how to get a mortgage as a freelancer, and that's where you'll find out how to fill in my A1 videos, you know, those sorts of things are there. And that we've done at the beginning, there it is again. And I think it was supposed to say thank you very much. Thank you. Any questions? Yeah, by the way.
It's probably really stupid, it's just very basic. If, so as a student now part-time, if I would need to declare self-employment because of 1,000 this year, say,
Yeah.
if next year it's not as good of a year and it's nowhere near 1,000, what would I do then?
You could take yourself back out of self-assessment. So the question was, if I need to do self-assessment this year but I don't next year, what do I do? You can take yourself in and out, but truthfully it's a faff. And I would sort of say, if once you go in, even if you're below a required threshold, so you're under the £1,000, it's probably faster and easier to just click the buttons and file the return than it is to try and get yourself out and then register yourself back in again in a subsequent year. That would be my recommendation for you. You can, I don't know how effective this is anymore. It used to be that you could ring up and sort of say to somebody, you know, I earned 1,200 this year, but I'm not going to earn more than that next year on my self-employment, you know, and they would sort of, there was like a kind of an agreement, it all just was fine. I don't know whether that's still an option or not. I would probably say, if in doubt, file a return. It means you won't get late penalties. Everything is so chaotic at the moment that it's just as easy to file a nil return as it is to wade through the complexity of the forms you need to get back out, and definitely easier than trying to get through to them on the phone.
Okay.
Yeah.
Sorry, one more question. Obviously, as a lot of us are starting careers and things, a lot of us have separate employed jobs
Yes.
that aren't related to our self-employment forms. Obviously, you're already taxed on that.
Yes.
But how does it work? Obviously, you can't declare with that, but it's.
I'm really glad you've mentioned that, because this is a really common one for the general talk we do. So for those of you who are students in particular, but actually those of you who do maybe peri-teaching jobs where you're employed in maybe 2 schools or 3 schools potentially, you want to watch out for those and possibly file a tax return voluntarily, because what happens when you've got multiple employments is not what's supposed to happen, but what does happen is that you get put on tax codes that might not be the right tax code for you. And often as a student you'll get put on an emergency tax code, which means you get taxed at 20% from £1 upwards. You don't get any tax-free allowance out of it and all of that. So you're paying tax at 20% on every penny you make from this extra job that you've got. And you're doing that in 2 or 3 places, and none of them are talking to each other. And at the end of the year, you might have earned less than the tax threshold, which is £12,570, and nevertheless paid tax, just because the system wasn't very joined up. And the way out of that is, there's 2 ways. Ring up HMRC and get them to update your tax code across all of the employers, and then make sure the employer is updated, and then look at your pay slip and make sure that's done right, and check and check and check. Or actually, truthfully, given that you're going to have to get to grips with it eventually, I would say file a tax return, put it all into a tax return, it all goes around in the big bucket, it comes out with a tax bill. If your tax bill is 0, you'll get a refund, because you shouldn't have paid any tax. So you need your P60s, which is the end of the year summary slip from your employment job, and you put all of your P60s into separate employment pages in your tax return, and yeah, if you pay tax at source that you shouldn't have paid because you don't actually hit the threshold, it'll be refunded to you. So I personally, it sounds more complicated, but given how disjointed everything is at the moment, I actually think in many ways it's the easier. But if you really hate the idea of the tax return, then you could ring up and say, my PAYE code is wrong. I'm only going to earn 3,000 from this job, 2,000 from that job, and 2,000 from that job. Please, can you put me on a tax code that doesn't take anything from anybody? And they should do that. But those codes will go to your employers, not you. Then your employers have to plug them in, and ideally they have to plug them in before the end of the tax year, so everything gets updated and corrected in the final month, which is going to be March each year. So depending, if you're doing this in February, you're like, if you're doing it in November, probably fine. Yeah, there was another question.
I was just going to ask, so I'm so sorry. I thought you worked for Orpheus Accounting, but I see my TripAdvisor up there. So have I got that wrong?
So my tax advisor.
Sorry,
You're really funny. Yeah, so honestly, I'm still in two minds about whether this was a good or not idea or not. Because my tax advisor is designed, basically we don't take in clients.
Yeah.
We do like education stuff, we do resources. At some point that community is probably going to have a low subscription tier to cover the kind of investment we'd like to make into it. At the moment it doesn't, but it also doesn't have a huge amount of resource in it. It's working its way up. But it's not designed to provide specific advice to specific people. It's a more broad-ranging option. So we put it on a separate name originally back in 2020 when I first thought of it. And it was actually born out of these academy talks, because people would come up at the end and go, I really would like you to be my tax advisor. And I would think, well, yes, but actually you just need 1 or 2 pieces of really good advice. You don't need like a full service engagement. How can I do that? And that was the idea behind it originally. And that's kind of why it's there. If you become a client of ours, yes, that's all done under Orpheus Accounting Limited, which is my original thing that's been going for years and years. And that's a more traditional accounting practice. We do your tax return, your VAT returns, your annual accounts, your company accounts, your charity accounts, whatever it might be. And obviously we give you all the tax advice, because we're a tax advice / accountancy practice. And because I can't keep up, I can't tell people about both, so I've just stopped. And I've just kind of assumed if it becomes important, we'll explain it, but otherwise we just, because everything on social media and forward-facing is tax advisor, because it's educationally intended. So yeah, but yeah, full clients are Orpheus ones. Yeah.
In a similar vein to your question, so just scenario, you're starting out, you're maybe making like a little bit from professional singing gigs, but most of your income is from a completely different income stream. What if your so-called kind of singer expenses are more than what you're actually earning? Can you claim those against your other income?
Oh,
or
that's
will
such a good question.
Will they say, well, you've only made 1,000?
Yeah, that is a great question. And the short answer is yes. But before you do that, when you first set up, there is an important distinction, and none of you guys fall into this, but just so I've been thorough, you have to meet what are called badges of trade. The other day somebody thought I was saying badgers. Badges of trade, which basically distinguishes what you're doing, albeit loss-making, from a hobby. Because HMRC don't want you claiming expenses against your hobby musician. Fun thing. They are totally fine with you claiming expenses against your valid, albeit fledgling, musician business. That's fine. And it can be a fledgling loss-making musician business. It just has to meet the badges of trade. There has to be an intention to get out there and make money and to be a profitable business. And there are lots of boxes you look at. There are about 8 things that define badges of trade. So let's say fine, you meet the badges of trade, you're loss-making in your first couple of years. You can claim what's called sideways loss relief, which means the loss you've made in your self-employment can be allocated sideways against other income, and potentially would generate a refund. Yeah, or you can just leave that loss there and carry it forward until such time as you make profit in your self-employment, and then you can offset the loss that you've been carrying forward. So it definitely is useful to do. Yeah, if you're investing, building a website, buying a Mozart score collection, getting a really fabulous frock made, those are all investments in early stage startup stuff. So absolutely keep them. Don't think that just because you haven't made money on it yet that they're not valid. But the one thing to watch out for is typically what would be happening in these early days is you will be making, I don't know, let's say a couple of £1,000, let's say £3,000 or £4,000, and let's say you have £2,000 or £2,500 of expenses. The sad thing that happens there is that they just go off that income, but you're below the tax threshold anyway, and they're wasted. They're lost. There's nothing you can do. What you really want is have enough to be loss making. It's not enough to just wipe out your income. You want to actually be loss making. Then you can sideways relieve it.
And where are the badges? Is there like a list of badges?
Google badges
Oh, okay.
of trade, not badgers, badges. Yeah.
Say you've submitted tax returns for a few years, and say you've underreported expenses in previous years because we're so concerned about getting it on time.
Yeah.
Maybe you've only reported the income for the last 3 years.
Yeah.
But you realise, okay, all the travel expenses you didn't put into your return.
Yeah.
Can you do that retrospectively?
You can do something up to 4 years later called make an overpayment relief claim, which is where hands up, I've accidentally paid more tax than I should have.
Yeah.
And the only thing is, they don't generally like overpayment relief claims, which are born out of kind of, I'm not saying this is the case, but like carelessness or lack of practical input or I didn't have time. Those are the kind of things that they're less likely to be sympathetic to.
Right.
But for example, if you were to go back and say, I genuinely had no idea I could claim the cost of building my website. That cost me 1,500 quid.
Yeah. Sure.
Now I realise I could. I suspect they'd be more sympathetic to that.
Okay, fine, sure.
But
as a reason, it has to be a good reason.
it has to be a good reason. Again, if you Google, the key phrase is overpayment relief, and it'll give you what's kind of what's
Yeah.
accepted generally and what's
Yeah,
not.
for me, it's maybe as travelling to, say, a church, where direct music thing, and
Yeah.
I haven't claimed for any of that travel costs.
Which made me funny just before you said that. How am I doing?
Yeah.
Yeah, okay. So the one thing we skipped over because we skipped travel expenses, and I will just come back and say this one thing about travel because it's really important for church jobs and peri music teaching. If you're self-employed, but you're travelling to a place of self-employment which is itself fairly predictable, the key phrase here is habitual and regular, so church job, peri teaching, that is not, generally speaking, allowable travel expense. Because even though you're self-employed, it becomes what they would say is akin to commuting, the way you commute to an employed job. And commuting costs are not allowable. So there's this kind of grey area which actually came out of a big court case in 2015 called the Dr. Samadian case, where he was an NHS consultant who did 2 days of private practice at 2 different private hospitals every other week, and his travel expenses to those private hospitals, even though he was self-employed in his capacity there, was disallowed because his consulting rooms were available to him. They weren't there all week, but they were available on that day.
Yeah.
They knew he came in every other fortnight, so his room was available to him every other fortnight. People expected him, he had bookings, he had a receptionist or whatever. All of those things defined those places of work as habitual and regular, which meant getting from home to that place was no longer allowable because it was commuting to a place of work, even though he was employed, not self-employed. So it's this little kind of corner of self-employment. Travel expenses, habitual and regular, and the ones that can't be allowed are church jobs and peri teaching jobs.
But is that only if you're like the regular student there rather than like definitely around all the place?
Yes, it's it. The way I tend to suggest people think about it is, if you didn't show up, would somebody go, oh my God, what's happened? Where's Miranda? Is she all right? Let's just text her and make sure she's okay. She should be here. If that's the reaction somebody's going to have, I would say that sounds habitual and regular. If it's your teaching room and nobody else, woe betide if somebody comes into your room, that's habitual and regular. If you have an email, that's sounding a bit habitual, a school email that students and teachers can get in touch with you, that's a little bit habitual. It's a grey, like so many of these things are, it's a grey area. So if you Google habitual and regular, and if you really want to know, you sort of put it in and say, give me a couple of examples that HMRC challenged on the habitual and regular test for self-employment. You'll get a couple of different cases. You can have a look, see, do you meet similar criteria? Does it make it a little bit okay for you?
Oh, sorry, just to finish up with that, like private students that you see on a semi-regular basis.
I would say less likely,
Yeah.
but it depends again.
If you're like weekly,
If you're
for a whole year,
absolutely
no.
rock solid every day at somebody else's house,
Yeah.
it's borderline.
Yeah.
It's the kind of thing I'd put in a white space, you know, going back full circle. I would say something like, included in my travel expenses are expenses to my, I wouldn't use the word habitual or regular. I would definitely not use those words, but you know, traveling expenses to some teaching that I provide at these locations. Something like that, I'm not sure. You'd have to think through it because it's not really designed to catch those kind of grey areas. What it's designed to catch, to put it in a better frame, is a 6-month contract on a West End job. And you're in it, but you're self-employed. And you're in and out to the Lion King 6 days a week, but you're self-employed. That's what it's not. That's not okay. Church jobs, peri teaching, they're in a grey area. So that's why you have to think about it yourself.
Sorry, just on that, travel expenses, the way I've always done it is just, you know, I track my Oyster tap-ins.
Yep.
And then, you know, with each job I put that in a spreadsheet next to how much I've spent. I've never in a tax return actually detailed, like I've just put the lump sum travel expenses over the year. It's not like you have to specifically.
No. No,
Then it's like, how does HMRC know that some of them?
they don't.
Okay.
And so they only ever know, you know, and it's always a question I get, well, if they don't know, why can't I just put it down? You can,
Yeah,
but it's
okay.
fraud. So it's up to you. Yeah.
I think there was one more question, just there.
Oh,
Sorry.
I'm sorry.
In terms of like a startup investment for musicians, I'm talking specifically about singers here. You know how for instrumentalists you can invest into a better bow or like having I don't know, more expensive hair
Yeah.
that improves the sound. For singers, most of the time it would be some sort of an activity such as I don't know, a steam room sauna or anything that most of the time for let's say more ordinary workers is something to do with relaxation.
Yeah.
How do we put it into tax to explain that it can be work like, because you wouldn't do it once a month to relax, you have to do it regularly.
Yeah.
Like for example, it's a bit of a personal thing that I notice how much of an effect it has on my own voice.
Yeah.
And like how do we put it into tax to explain that this is for work I do every week, and specifically let's say like every Monday for 2 hours.
Yeah, so in that sort of scenario, I would use the white space because it is a grey area and HMRC's default, not knowing singers and not knowing what the voice needs, things like steam rooms or yoga sessions or vocal massage, whatever it might be, they're not going to understand any of that. So you have to help them and make it easier for them. I would put it in and I would explicitly say in the note, the white space, 50% of my steam room sessions have been claimed because they are wholly and exclusively necessary, or they are necessary for the performance of my job, something like that. And then, you know, you're going to get a punchy HMRC officer that's going to go, no, it's not. You'll go, yes, it is. I mean, I don't know what would happen, truthfully. But I would definitely annotate it. So we had mentioned earlier things like a percentage of Pilates, yoga, gym, health-related stuff, anything like that, where it's fundamentally a personal thing usually, but there is a clear reason why you do it as a singer. I would take a proportion that you think is relative to your work benefit, and I would put it in the note. Yeah.
Great. Thanks very much, Sinead. That's
Pleasure.
great.
Thank you.
Before we all go, I just want to say one more thing which I forgot at the beginning.
The London Singers Collective is holding what we call a Concert Singers Symposium on the 23rd of October. It's a specialist one-day intensive oratorio and concert repertoire course, and it will be run by Roddy Williams, who's a well-known baritone, and David Hill, who's a well-known conductor. The auditions are going to be at the National Opera Studio on the 18th and 22nd of July. Again, if you look up our website, London Singers Collective, email me if you want an audition. The auditions are £15, that's the application fee, but if you get on, you do the day for free, we pay for it. So something for you to think about. Thank you very much.